This is King World News. I'm Eric King, and you're about to hear our exclusive weekly gold brief with GATA, this time with Ed Steer. Remember to go to our homepage at www.kingworldnews.com for more interviews, where this week we also have a very interesting interview with Dr. Mark Faber, editor and publisher of the Gloom, Boom, and Doom Report, as well as Bob Quartermain, CEO of Silver Standard. And where next week we will have Bob Prechter from Elliott Wave International, Peter Schiff from Euro Pacific Capital, and Jeff Burns, CEO of Pan American Silver. Joining us now is Ed Steer, Board of Director of GATA and author of Ed Steer's Gold and Silver Daily over at Casey Research. Ed, there was a TV news story from China that says buy silver now. Can you elaborate on that a little bit?
Yeah, I saw that story about 2 weeks ago, and when I saw it, first of all, the first thing that came to my mind, I thought it was an advertisement. But if you look at the beginning, you'll see right away that it's actually a news item on one of the English-language Chinese stations for buying silver, and it was basically an infomercial for the metal. I was absolutely amazed to see it. Ted Butler wrote about it and put up a commentary saying that, he doesn't have to really say too much about the fact that if the Chinese people decide to take the silver bit between their teeth, that could certainly make a profound change in the silver market. And to see the Chinese government come out and let a story like that run tells you something, that there's something going on in the background in silver, that it's just one of these sleeping giants, another sort of data point on the way to seeing silver prices at a much higher level if the Chinese really get involved in this in a big way.
Let's talk about that a little bit more for just a minute, because I interviewed Bob Quartermain this week from Silver Standard, a CEO over there, and we were talking about the silver fundamentals quite a bit during the middle part of that interview. And he talked about the fact that there are no government, essentially, stockpiles left, right? So the question becomes, Ed, as people begin to move in, and this is what I really went over with Bob, meaning won't this be a mania kind of a situation, was what I was asking Bob, because you're going to basically have these lack of stockpiles. And yes, people have it in their private possession, but it's a thing where they look at it as a preservation of wealth and not necessarily an instrument to make money, but rather a preservation of wealth, right? Or a wealth storage. So then it is a monetary asset. So as we begin to have the Chinese enter the market, if they come in and begin to buy, and then you have people globally also, as you go through a secular bull market, as you know, right, Ed, you're going to have the increase in the purchasing by the populations across the globe, not just in China. So then where will the silver come from, I guess, is my question for you.
Well, to tell you in a word, it won't come from anywhere because it just frankly doesn't exist. Bob Quartermain is right. There's no supplies out there anywhere, and anything that there is sort of basically hand to mouth. You're not going to get it from the COMEX warehouses, and I know that the Central Fund of Canada, even though they won't tell me directly, I know that, when they get an order for silver placed with CIBC, when they do one of their offerings, it takes months and months and months, like 3, 4, 5 months before they see the 2 or 3 million ounces they got on order. So basically, there's just no physical silver, whatever, in the pipeline with the dealers right now, and that could be taken out in a heartbeat if we see a silver spike up here anytime soon.
Also, the Russians have added another 600,000 ounces to the gold reserves in July. Or just hand the ball off to you and let you run with this, Ed. Let's update people on what's going on there. Okay,
well, I track the monthly goings-on over at the Russian Central Bank's website and their English language version of it. And last night, after I'd done my report for Casey Research, I clicked on their website and I saw they'd updated their numbers for July. And you're right, it's 600,000 ounces, and in June it was 300,000 ounces. So in the last 2 months, the Russians have put away 900,000 ounces of gold into their reserves. And that's not exactly chopped liver, because the 600,000 ounces they put away in July is way more than what the country produces in a month. So either they're buying stockpiles they have in their own country, or they're buying it on the open market someplace. And year to date so far, the Russians have put in about 1.5 million ounces all told. But in the last 3 or 4 months, they've really picked up their buying levels. And if this is an indication of what's going to be happening in the future, well, I would say that the gold price manipulation scheme is going to come to an end at the same time, because the Russians are seem to be buying their own production now, and the Chinese certainly are. So I know Goldfield Mineral Service had a story about the other day saying the demand was down, whatever it was. Well, I don't believe that for a second. And the Chinese and Russians are eating their own cooking. They're taking American dollars and turning it into something of value. And I don't think either, Chinese gold or Russian gold, for that matter, that they're mining is reaching the market at all.
Along those lines, if we did see maybe a slack in demand, let's say in the jewelry demand side, it was a little bit slack because you basically had the rupee, for an example, strong against the dollar, and then you had a relatively high gold price when comparatively speaking over the last 6, 7, 8 years, right? So if there wasn't really as much demand there, I guess here's where I'm heading with this. We're not seeing the European Central Bank selling of gold anymore, right, Ed? So as you mentioned, in this kind of environment where you have these other central banks, again, going back to the same question, but where is the gold going to come from? Even if they temporarily manipulate the price back down here, where is the gold going to come from to fulfill this demand disequilibrium that exists where you have too much demand and not enough supply? And they used to fill it with the central bank gold selling. When that is stopped, essentially, where are they going to get the gold from? Because now they're talking about tapping the IMF, right?
Well, yeah, that's true. There certainly is more physical gold available in the world than there is in silver. But like you said, the Russians are buying gold, the Chinese are buying gold, the European central banks in the last 3 or 4 months have basically stepped totally out of the market. And the only hope now is for IMF gold, and of course IMF gold is actually only European central bank gold that's earmarked for sale to the IMF, and it will be interesting to see when push becomes shove, whether or not they're going to say, well, you know, we really don't want to sell this IMF gold, and I do believe we're going to keep it. So we're getting closer and closer to that day, and it's going to be really interesting to find out what happens. But getting to the point, I think gold's going to be like silver. If the central banks are buying it, and the ones that are buying it that we know about, there's probably a half a dozen or more that are quietly buying it under the radar screen we don't know about. So I think that one of these days, gold is going to be just as short supply as silver, and when that day comes, we're going to see prices take off to the upside like we've never seen before.
Let's talk about the CFTC position limit story and the gold and silver short position, because Ted and I have been trying to alert some of the listeners through his segment that they do have a pretty big short position historically on in gold right now, the commercials, and they are very long the dollar also. So you have the sort of the small specs that are short the U.S. dollar and the large specs, and then the commercials have taken the other side of that trade, and then, of course, the same thing on the gold side. So now Adrian Douglas mentioned last week that he thought they could be overrun possibly in a commercial signal failure, but let's talk a little bit about this CFTC position limit story here.
Ted Butler came out with a piece today, and I certainly don't want to steal his thunder because I know you're going to be interviewing him tomorrow. But basically what it said was that the CFTC came out with a statement today saying it was pulling the exemption from position limits from 2 entities that were trading wheat, corn, and soybean futures. And basically what Gary Gensler said was he said, I believe that position limits should be consistently applied and vigorously enforced. Position limits promote market integrity by guarding against concentrated positions. And if that goes for corn and soybeans and wheat, I would say it goes triple or 100 times for what the current situation is in silver. And if Gensler and the boys at CFTC crack down on silver like they've cracked down on everything else, well, it's going to be a whole different ballgame when they get around to enforcing the rules there. And Ted and I certainly hope that that's going to be the case, and sooner rather than later would be better.
Also, Ted did an article from December, I think, of 2003, Take It to the Limit. Is that something you remember, Ed?
I'll tell you what, ever since I saw that piece, I think it's there's half a dozen articles that have come out over the last 10 years that I just, when I saw it just goes straight into my head, and I say, I remember that piece, and I'll remember. And this is one of the pieces I remember because it's absolutely the most incredible thing I ever read. It like you said, did back in 2003. And basically what it says, the CFTC, it's right on their own website. It says, and I'll read it to you because it's only about 10 lines. It says maximum daily price fluctuation. Okay, it says initial price limit. This is for gold or silver. Based upon the preceding day's settlement price is $1.50. 2 minutes after either of the 2 most active traded months at the limit, trades in all months of futures and options will cease for a 15-minute period. Trading will also cease if either of the 2 active months is bid at the upper limit or offered at the lower limit for 2 minutes without trading. Trading will not cease if the limit is reached during the final 20 minutes of a day's trading. If the limit is reached during the final half hour of trading, trading will resume no later than 10 minutes before the normal closing time. When trading resumes after cessation of trading, the price limits will be expanded by increments of 100%. And a fair way to read that comment, Eric, is that there are no daily limits in comic gold and silver. They can be $13.85 or $14.50, whatever the price is today. And by the end of tomorrow, it could be $145 if the CFTC or if the COMEX wishes it to be, because that's what the rules say. It's going to be interesting to see if that ever comes to fruition. And why would the CFTC change the rule? The COMEX changed the rule if they weren't planning on using it someday.
Interesting, Ed. You also write, as we mentioned in the opener there, you're Ed Steers Gold and Silver Daily over at KC Research. And I'll give you a little plug here, but we'll put right in your interview side there something that people can click on so they can go sign up for this because it's free. We'll provide the URL, and people just need to go to your interview page, and we'll have that on there for you, Ed.
That's very kind of you, Eric. Thank you so much for that.
All right, sir. Thank you for joining us.
Entirely my pleasure.
Thank you for joining us at KingWorldNews.com. Remember to tune in next week for another great show where we will have Bob Prechter from Elliott Wave International, Peter Schiff from Euro Pacific Capital, and Jeff Burns, CEO of Pan American Silver. Also remember to go to our Gold Plus page for exclusive weekly interviews with Ted Butler and GATA, and in the business page for Barry Ritholtz, author of Bailout Nation.